welcome back to the second module. And today I'm going to talk about how multifamily investing consistently outperforms single family homes. And if you're already coming back to the second video, then congratulate yourself. You're in the top 20% of people, because most people see that there's a hard obstacle in front of them and they'll just turn and go another way. They'll just find something that they think will get them there. They're not willing to put in the effort. So congratulate yourself already on making it back to the second training here. So like I said, today we're going to talk about why multifamily investing outperforms single family rentals. So let's start here. We're going to talk about how multifamily properties is like owning a business. I mentioned this in the last training. And how single family homes is really you're self-employed. And then just overall, what are the benefits of, professional management and how you can and scale. So we're going to dive into each of those topics. And so we'll start with how multifamily investing is actually a business. This is a mindset shift that I had to make, a paradigm shift, that what you're really doing here, even though it's apartment communities and housing, you're buying and selling businesses. And the name of the game is how efficient can you make those businesses that you're buying and selling. It's a just different ball game than when you're looking at single family homes, because you're really limited to the comps there. So because you're doing this, because you're buying a business, along with that, one of the huge components in the success factors is the property management company that comes along and manages that property. There's such an important key role of your apartment investing deal. So what are some of the things that they can handle? They handle the maintenance. You generally have on-site maintenance, or they'll have staff that does the maintenance. You don't have to do any of the maintenance. You don't take any phone calls. You don't deal with the tenants, the termites, the toilets, whatever the issue is. It's the property management company gets those phone calls. They handle the leasing. You're not getting the phone calls about getting people to come in and rent out apartments. You're not dealing with any of that. They handle the rent collections. They handle the bookkeeping. They handle the evictions. They handle all of your day-to-day operations, and that's what makes it beautiful. It makes it a lot easier to scale in these deals. And as you scale up in size, you get more economies of scale. It becomes much more efficient. So as you can take multifamily, you look at the advantages there, you just think, okay, I'm buying a business and it comes with processes already in place. As opposed to single family, you're self-employed at that point. You have another job. It's really what's going on. And you are responsible for all of those things that come up. So any of the maintenance, you've got to track down the plumber, the electrician, or you got to go do it yourself. You handle the leasing, you'll handle the bookkeeping, you handle the advertising. And if you've already done some single family, or if you've looked into it, there's not a lot of margin per door or per property. And if you hand that over to professional property management on a single family home, it really eats up a lot of your revenue. And the people I know who own single family homes, I ask them how much they cash flow, and all of them have told me I don't cash flow anything. I just get the appreciation, which is good, but there's zero cash flow component to it, or very little cash flow component to it. And they're doing a lot of that work. So time consuming, it's inefficient. There's just different. Like I said, you own a job basically with a single family home, and the more homes you get, it doesn't make it any easier. It actually makes it harder. So when you get into these larger properties, and I've said this before, but I can't say this enough, is you just get better economies of scales. The more units you can manage under one roof, the more efficient and more cost effective your operations become. Now, here's an example I think you can probably visualize is, imagine you have one 60-unit building. That's got to be much easier than managing, 6 duplexes. And if you were to try to scale it up to get to, 30 duplexes, Imagine managing 30 duplexes versus one 60 unit property. It's night and day difference. And that's really where your biggest advantage is. And then on top of that is your time efficiency. So a lot of people think it's a bigger property. It's going to take a lot of your time. Now, it is true. There's what we call asset management in the business. When you first take over a property, you're much more involved. You have to clearly communicate your business plan, your strategy to the property management company. And you have to make sure they're executing that correctly, and you've got to work with them. I mean, it's your vision, it's your plan. They should have signed off on it before you even bought the deal, but then ultimately they've got to implement that, and you're managing, you're making sure that they're doing the right things and managing, implementing that. But all in all, it takes very little time. The properties that I own, or I'm a passive investor. And the passive investing deals I don't do anything with. I just get mailbox money. But those that I own, really for the most part, we'll meet once a week for an hour, and all the staff does everything else. There's a few times a year we've got to get more involved. But once things are stabilized, it just really does not take very much of your time, as opposed to the single family homes. It's a constant demand, and if something happens in the middle of the night, who gets the phone call? You do. You have to deal with that. And so you just have, when you do multifamily, you put in less time and you can scale faster. And a good way I like to think about this, if you haven't read anything by Robert Kiyosaki, I highly recommend it. He has this concept. He has two books. One is Rich Dad Poor Dad, and the other one is Cash Flow Quadrant. And in either of those books, he talks about this idea, this cash flow quadrant. I'll show you here in just a moment. There's basically 4 different ways you can make money. And multifamily, you're a business owner and investor. You're on the right-hand side of the quadrant. And single family, you're self-employed. You're on the left-hand side of the quadrant. And so, when you own multifamily, it positions you for wealth building. So let's take a look at the cash flow quadrant really quick. So here you can see you have ESBI, that's employee, self-employed, business owner, or investor. And, the vast majority of people they have a job, and time equals money. They don't have any leverage. It's just you go in, you clock out, and that's how you earn your paycheck. And a lot of people think that, oh, well, what I want to do is I want to be self-employed. I want to be my own boss. But you still don't have any leverage, because time is money. And all you do is you just own a job. And think of single family homes as this: you're self-employed. Or maybe you should look at it as a job owns you. But when you get into multifamily, you're buying and selling businesses, and it's an investment. So you actually jump over to the right side here, and the whole business can actually, what I love about this visual is it's passive income and not dependent on your presence. So when you're buying these multifamily deals, you're buying a business. You own a system, and people work for you. Those people, you're leveraging them to make money for you. And it's an investment. So your money is working for you, and it creates passive income. Now, yes, as a general partner, you still have to do some work. It is not a totally hands-off. I don't recommend that. But you really get to double dip. That's one of the things I love about this particular asset class. There's other asset classes you can invest in, but multifamily is just one of those that it just, business owner and investor, it's just a great idea. So just another reason why, multifamily outperforms single family. The other part of this is that the fact that you're leveraging professional management on site, and it allows you to free yourself. Once you got a deal, you got it under contract, you get that deal, and you start implementing the business plan. Once things start to stabilize, it allows you to go back to focusing on growing your portfolio and achieving your financial freedom. So imagine getting an apartment complex, 40, 50, 60 unit apartment complex under contract. A few months into it, you've got the property management doing everything. Things are going great. What do? You go find another deal, and you repeat. and you repeat and you repeat, and you can really grow and scale that way, as opposed to single family homes where you're just going to have to, you just get more and more and more work. That's just not really the case with multifamily, because you have an experienced team that handles your operations. And single family, it's just hands-on involvement from you for basically everything, and unless you're hiring it out, and then that just cuts into your bottom line. But multifamily, you factor all that into your expenses up front. So really, this multifamily apartments, they're everywhere. Any city, any town, anywhere you go in the United States, there are apartment complexes. And so they offer stability and consistent returns regardless of market conditions. Because regardless of what's going on in the market, people always need a place to live. They always need a roof over their head. And the way I like to help you visualize that is the stock market. If you pay attention to it, for example, Elon Musk can go make a tweet or X, whatever it is, and the stock market can react up or down. Or the recent presidential election, depending on which way the vote goes, the stock market's going to react, and your money is going to increase or decrease in value, and it can happen within hours. Multifamily just doesn't move like that. Like I said, people's tenants still need to show up. They need a roof over their head. They have to, they pay their bills, and so it doesn't have the level of volatility. Now there are cycles, there are up cycles, there are down cycles, but it just does not have that volatility that a lot of the other markets or asset classes do. So the other thing that is great about it is, I've been doing this for 7, going into my 8th year, and consistently been able to see double-digit average annualized returns. Meaning, if you go and buy an apartment and then hold on to it for 5 years and sell it, and you make 100% return on your investment for not only you, but for your passive investors, that's a 20% average annualized return. Even an 80% return on investment over the course of 5 years, that's a 15% average annualized return. So you compare that to over to the stock market, and at best, when the market's going really, really good, you can, 10% maybe, but it averages, I think, a little bit less than that, maybe 10%, but it's just another reason why apartment investing outperforms. So what that leads to is it's success for both the investors and the general partners, and you're creating jobs for the property management staff, and you're improving the communities. So, just to recap everything really quick on this second session, multifamily investing, I like to think of it as you're investing smarter. It's more efficient. And what I'm going to do is tomorrow is I'm going to show you how to achieve those consistent double-digit returns using my proven strategies. So recap really quick, multifamily investing, it's just much more time efficient, scalable, and profitable as compared to single family homes. It's a higher effort and limited growth potential. So in the next video, we're going to look at these recipes on how to help you find those investments and get that average annualized double-digit returns. I'll see you in the next video.